Welcome to everyone in today's short webinar. Uh, at the outset, I would also like to thank Mr. Partha Das for arranging this opportunity wherein we can connect with our fellow Indians who are doing so well and making our nation proud in UK. So what I have planned is that I'll give a brief overview of the investing landscape by covering a few major topics, which could stretch for another 40 minutes or so, 45 minutes. And then we can interact by way of question and answers if there's anything that you would like to discuss in mind. So that's how we can go ahead. So going further with this, uh, talking about the present landscape of investments as far as the Indian economy and the Indian financial markets is concerned. I just wanted to give a brief overview of where the Indian economy is at present and what is the foreseeable outcome of whatever has happened in the last few years. So if we look at the current growth rate of the GDP, which is a barometer of the economic growth, it is right now about 6 to 8% in this band, which is, of course, undoubtedly the highest in the top 20 economies of the world. So that is a big landmark achievement, surpassing not just UK, US, but also all other emerging economies, which could be Brazil, China, Russia, whatsoever. And with this, we usher into the Amrit Kal, so-called Amrit Kal, which is the journey of India becoming and transitioning from a developing to a developed nation in the next 25 years. Now, talking about the major macroeconomic fundamentals, I'll not stress a lot upon them, but just to give you a highlight, the number one factor that is very positive right now in India is a strong and stable government, a government which can enforce whatever reforms that it has in mind, be it as far as the taxation front is concerned, or the public sector enterprises, capital markets, whatsoever. Also, if we look at the other aspects as far as the judiciary and all other allied activities which are critical to the functioning of the economy is concerned, even those are witnessing great amount of improvement because of this stability of governance that the country has witnessed in the last decade. Geopolitically speaking, India is at stands which it was never ever before, like never before, in terms of having the best of the diplomatic relations with not just the superpowers, but all of the strategic partners across the world, which is why it is able to structure the trade policies to its own advantage without having the hindrance of major sanctions. Also, if we look at the infrastructure development that has happened across the country, right from the top to the bottom, the parts that were most neglected all these years, they are witnessing a sea change and having investments running to the tune of billions and billions of dollars. Manufacturing, a sector which was neglected since the past few years, since India was majorly a services-driven economy, is now seeing a sharp change, especially in the last 4 to 5 years after the COVID crisis, considering the China plus one strategy that majority of the multinationals are now adopting, which is why the manufacturing base to a very good extent is shifting out of China to not just India, but also several other South Asian economies. And which is why, that too coupled with the several incentives of the government, which could be a production living incentive scheme, Make in India initiative, which is why there is a robust capital expenditure, capex cycle, as well as the Indian exports are also crossing all-time highs. Demographic dividend. India is the youngest amongst the youngest countries in the world with a median age which is as low as 28 to 30 years. And the interesting part is that this huge population, which is almost close to becoming the largest in the world, surpassing China, is very young, that too talented, English speaking, and comprising of all millennials and Gen Zs, like me who are ready to take India to the next level. Even if we look at the consumption, then India has crossed this important per capita mark of per capita income mark of $2,000, which is why the level of consumption and the shift from the unorganized to the organized sector is seeing a sharp transition across different fronts in terms of all different sectors, which could be retail or any other consumption driven sector. Also, the initiatives in terms of digitizing and financializing the entire economy are working very well, with these mind-blowing statistics of recording the highest number of UPI transactions, internet users across the world. And because of this, cult of financialization, a lot of savings, not just in India, but across the entire, length and breadth of India, is now getting diverted into the financial markets in form of inflows, giving better flows to the markets, and that is the reason why the Indian markets are no longer dependent upon the foreign flows which they were a few years back. Now, whenever it comes to investments in India, especially for people who are earning and residing outside India, a major drawback and a major concern that they always had in their mind was the currency depreciation. It is a very obvious fact that the INR, the Indian rupee, is likely to depreciate against the US dollars or any other currency of a developed nation in the world. So that will lead to erosion in the value of the investments if amounts earned in USD or any other developed economic currencies are invested in the Indian markets in INR with the passage of time. To summarize this and to evaluate the kind of depreciation trend that the Indian currency is going to witness in the coming times, we have broken down the basic essence of this depreciation. So why does this depreciation of currency occur? It is on account of two reasons. One is the inflow and outflow of the foreign flows in the Indian market. So that will determine the demand or supply of the Indian currency vis-a-vis the foreign counterpart. And that is why it will lead to some kind of appreciation or depreciation in the currency. And the second reason, so the second aspect which can impact the depreciation or appreciation of currency, is the differential in the inflation of two different economies. So greater the difference in terms of inflation, more are the chances of depreciation of the Indian currency vis-a-vis the foreign currency. And if we look at both these aspects in the current economic context, then as far as the first aspect is concerned, which is foreign fund inflows and outflows, a lot of FII money has started flowing into the Indian market and is likely to increase with time when the Fed will reduce the rates in prevailing in the US markets. And till now, of late, FIIs in India were net sellers, which is the trend is now turning into net buyers, or they are neutral. So not just FII flows, but even FDI flows in terms of structural investments into the Indian economy by way of manufacturing, with the Teslas and Apples of the world investing into the Indian infrastructure and manufacturing capacities, will give a lot of boost to the Indian currency, which is why the depreciation of the Indian rupee may not be as what it was witnessed earlier. Now, if we look at the inflation depreciation, the inflation differential of UK vis-a-vis India, then it is always a rule of thumb that the country which has a greater amount of inflation tends to depreciate. So if we compare it, if US and India, then India has a greater inflation, and this differential as compared to as compared to the US market was even greater in the previous year. So inflation in US earlier was about hardly 2 to 3%, while the Indian inflation was at least 6 to 7%. So because of this difference in the inflation, it gave rise to the depreciation of the currency. Now, reducing with time. And if we compare Indian inflation with the inflation in UK, then the inflation in UK has of late exceeded the Indian inflation, which is why we can very well say that the Indian rupee may appreciate, if not depreciate, in the times to come because of this reversing trend of inflation. So in the coming times, it is very well likely that Indian rupee may not depreciate but might appreciate against the GBP, which is why someone investing from GBP to INR may end up earning out of this exercise. Now, going to the specifics of different kinds of investment opportunities that someone can explore in this new age India, which we have named the topic. The most simplest and the convenient to start with is equity mutual funds in India. So right now, equity mutual funds in India or mutual funds in general has an asset base of close to greater than 50 lakh crore rupees. And the entire India has now accepted that it is the most simplest, convenient, and the cost-effective means to invest in the India growth story by way of participating indirectly in the Indian equity markets. However, many of the investors that we come across and interact with have a tendency of building this mutual fund portfolio and investing into these mutual funds on a very random basis without applying the proper mechanism, or I would say the entire protocol of building a mutual fund investment portfolio. A well-designed portfolio should have a balance of all these three aspects. It should be dependent upon the financial profile of the investor, the kind of risk appetite that the person is willing to take, and of course, the financial goals for which the investment is made is utmost important, basis which the entire portfolio needs to be constructed. Mutual funds in India comprises of all these different kinds of categories which I mentioned, which could be a large and mid, flexi, multi, so on and so forth. So all these different kinds of schemes have got their peculiar characteristics in terms of their underlying investments and the mandate for which, according to which they invest these funds. Appropriate allocation across all these categories is very important, and there should be a kind of bifurcation by way of a asset allocation of the entire portfolio into well-performing schemes across all these categories. Similarly, not just category-wise, but AMC, that is the mutual fund company-wise bifurcation, is very important, because of which we might not become lopsided into any particular few AMCs, or the portfolio should not be too diverse that it comprises of unnecessarily a lot of different kinds of mutual fund companies. Two important characteristics or performance evaluators that I wanted to mention are quartile performance and benchmark comparison. Now, these are very important constituents, and they have got their own benefits, their own characteristics, and they in mutual fund portfolio, once constructed, once invested, should be regularly reviewed on systematic basis on depending upon these two different parameters. Moving further, a portfolio management service is an extended version of investing into the Indian equity markets. So a mutual fund is basically a pool of vehicle which invests into different kinds of equity in the equity market. So it's a pool of funds that invests into the equity markets. And while as a PMS is a distinct portfolio of equity shares that is owned by the particular investor and remains in the demat account of that particular investor who is investing into the portfolio management service. Just as a mutual fund, a PMS also has a fund manager, and the investor can select the strategy that he or she is willing to undertake with that portfolio, which could be into a multi-cap, flexi-cap kind of a scheme, depending upon the other factors that are discussed, which are the risk appetite, the goals, so on and so forth. And this entire equity portfolio, shares which are held in the name of the investor in their own demat account, are regularly managed by way of buying and selling depending upon the market trends by the particular fund manager and the team. Now, PMS as such has got a greater, I would say, flexibility in terms of investment than a mutual fund because of the limited regulatory restrictions. Now, just to give you an example, there are several sectoral caps, stock specific caps, which are there in a mutual fund investment because someone who is investing as small as 500 rupees starts investing into a mutual fund. So maximum allocation that a mutual fund can do to a particular script is 10%, or a particular sector is certain percentage. While in case of a PMS, the number of restrictions are lower. So the portfolio turns out to be much more concentrated into a few stocks in which the fund manager and the team have got a lot of conviction, which is why the volatility may be high, but the kind of returns that could be generated over time with a higher risk-taking ability are greater. Another advantage of a PMS is that outflows or inflows from other investors are not impacted. While in case of a mutual fund, since it's a pool of investments, a pool of funds, if there are inflows or outflows, then it impacts the entire pool and the entire corpus. So every investor is impacted maybe in a positive way or in a negative way. The minimum ticket size as per the SEBI regulation for a registered portfolio management service in India is 50 lakhs of rupees. Now, this 50 lakhs of rupees can be bifurcated into different strategies depending upon the choice of the investor. Both these options which I discussed so far are participation in the India growth story in the new age India into the listed market, into companies which are already listed on the stock exchange. Now, I would like to talk upon opportunities by way of investing into a stage before these companies get listed. That is the unlisted space. Someone would easily ask that what is the rationale of investing into these kinds of unlisted stocks? The answer to that is very simple: to catch them young, to take the advantage of being the early mover, and to take the entire juice in terms of appreciation when these unlisted companies approach the public markets for funds. What happens is that when these unlisted companies approach the public markets and go for an IPO, that is an initial public offering, there is a huge amount of demand for these kinds of companies by way of inflows from not just retail investors, but also several institutional investors, which is why it gives a huge amount of listing gain at the time of these kinds of listings. So the kind of return that someone can expect by becoming the early mover can be multi-bagger, which is measured in times, 3x, 5x, 7x, so on and so forth. And it is quite obvious that once these companies come for IPO, then the success stories become the success story of the business model becomes evident to the world at large, and so that kind of a multi-bagger approach or a multi-bagger expectation of returns may not remain thereafter. Now, there are several unlisted companies in India which are in the pre-IPO kind of stage and which are public limited, in which an investor can easily invest by way of simple transfer from Demat to Demat account. But there are several parameters which are very critical and which need to be evaluated by selecting these kinds of unlisted companies, which is number one, the promoter, the group that is backing these kinds of companies, which should be preferably a conglomerate into several different kinds of diversified investment in business interests, and with a very healthy track record in terms of the financial performance that has been delivered so far, with a continuous growth trajectory and that kind of outlook even going further. The business activity should be something that has a lot of potential, that is futuristic, that is of a sunrise kind of a sector, then a sunset and a dated kind of a idea. It is very important for that business to have some competitive advantage, kind of moat over its competitors to generate a sustained growth in terms of stock price appreciation. And naturally, there should be the chances of the company going for a IPO or initial public offering in the near future, which is why an investor can have an unlocking, value unlocking from the investment. And there should be also comfort in holding these kinds of investments for longer tenures. So for whatever reason, if the company does not decide to go for IPO in the near future, then the investor should be very much comfortable holding it as it is till that time, because the actual price realization happens during the time of IPO and thereafter. I would just like to discuss a success story, a recent success story of one of these companies, one of the unlisted company, which got listed 6 months back, that is Tata Technologies Limited. Now, this company was available in the unlisted space for investment since last 3 to 4 years. And any investor whom we had recommended this kind of an investment, if had invested in February 2021 of in just one share, which was around this price of 1500 to 1600 rupees, then the entire journey, which went through a bonus followed by a split, could have resulted into a total valuation of that investment of 1500 to 1600 rupees to 10,000, 11,000 rupees. So this is a 7x kind of a return in about 3 years, which is a mind-blowing kind of a compounded annual growth rate of 80, 90%. So this is the kind of multi-bagger opportunity that these unlisted stocks have. And just as the earlier example of Tata Technologies, there are several such similar kind of companies that are even available today for investment in the unlisted space, which could be another Tata Group company, which is a non-banking financial company, Tata Capital, or the largest mutual fund company in India, the SBI Mutual Fund. The stock exchange of India is also available in the unlisted space, which is a kind of monopolistic business. And these two HDFC Group companies, HDB Financial Services, which is a non-banking financial company, and a broking company, that is HDFC Securities. These are also available for investment in the unlisted space today. When it comes to investment into these unlisted kind of ideas, we often face these two questions in the minds of several investors. The first question is that identification of these kinds of companies is a challenging task. So much, as far as the listed companies are concerned, a lot of information is publicly available for anyone to assess and take a call as to whether this is right proposition for investment or not. But when it comes to the unlisted space, all these aspects, which are very critical, determine the investment, which is the business, future, promoters, etc., may not be completely available in the public eye. And the second question is that the price at which these companies are available, whether it is justifiable, whether it is in tune with that expectation of attaining a multi-bagger kind of return. So the answer to this is through investment in unlisted stocks through an alternative investment fund. When someone is planning to place a large amount of bets into these kinds of investment ideas and wants to participate in not just the pre-IPO companies that we discussed earlier, but all kinds of unlisted companies, which could be an early stage startup, a mid-stage company, a late-stage pre-IPO company, then this is the solution. So there are these regulated structures of investments, which are through alternative investment funds, which invest across all these three different kinds of unlisted companies. And the management of these AIFs are through experienced fund managers who are well versed as far as answering both these questions is concerned, which is number one, identification of very promising ideas, which have got a very good futuristic outlook in terms of the performance. And number two, identification and arriving at a logical valuation, which can give that kind of a multi-bagger return. Because these kinds of fund managers with a lot of expertise, they have got several globally accepted valuation techniques for valuing these kinds of companies, which can deliver that kind of a return. They are managed by reputed groups which have got a performance in terms of managing these kinds of funds. And the minimum ticket size as per regulatory requirements is 1 crore rupees, because it's a high risk and a long gestation kind of an investment. And the investment, right from deploying of funds to the entire return, which is by way of the realization from the sale of these unlisted stock equity, could take about 5 to 7 years. And the payment is to be made in tranches of different parts, which could range up to a year or two. And yeah, so this is that solution to it. And this is the entire summary of all the options that I discussed so far. And in terms of not just the minimum ticket size which could be required to get started, but also the kind of liquidity and the bank accounts, which is also important to invest into these kinds of ideas, which could be through an NRE or an NRO account, and the recommended holding period to attain a ideal kind of a return. So this is the entire summary, and yeah, so this is the entire gist of it. Just as we understand that diversification is important across geographies. So for all of you who are residing in UK, it is necessary or advisable to have a geographical diversification to participate in the emerging economies, which could be the Indian economy. Similarly, we advise and encourage all investors that we interact with who have got exposures in the Indian market or some other markets, which could be UK or any other country, to have exposure into the US market as well. So we have our own platform, which is through a tie-up from a US-based registered investment advisor and a broking partner, wherein any investor, may it be in UK, India, or any part of the world, can access the entire US capital markets by way of investing into any US stocks, ETFs, and we have also curated certain stock portfolios which the investor can select for investment. And this is at a very nominal charge. So there is no brokerage, there's no transaction fee, any kind of fees. It's just a fixed fee, annual fee on the portfolio value that is charged. And the funds can be directly remitted for these kinds of investments from the bank account, which could be in UK to US, and vice versa. And there are no tax or legal implications in as far as the India is concerned, because it's a platform which is built in partnering with the US-based advisor. This is a snapshot of the entire platform. So this is how the funds can be transferred, and this is how it is reflected. In a very encouraging part of US investments is that fractional ownership is also allowed. So that is also a very good thing. And these are some instances or some examples of the portfolios that we have curated. These is different kinds of themes, which could be, say, emerging EV tech theme, or the FANG MP theme, which is these top-notch, the most known companies that we are dependent upon. And of course, certain other themes depending upon the kind of mandate that is there, which could be fast movers or some tech-based ideas, some kind of competitive advantage companies, so on and so forth. One thing that I wanted to discuss today is that a lot of people, a lot of NRIs that we interact with have got this inclination of having some kind of investment into real estate in India, along with the other investments that they may have. So just a few pointers that I wanted to bring to your notice as far as real estate investment is concerned. So real estate, the way it works right now in India is that there is a lot of development across in major cities across the length and breadth of that particular area. So a particular area which may be very well known in any city in India may go for a very sharp kind of appreciation if someone is very bullish on some kind of development there. But then that particular area becomes no longer relevant after the passage of a few years, because the entire development shifts to a different place in the city, which is why there is a then there is a lot of time correction which means that there is no appreciation for a very long period of time. So all in all, the long-term returns in India from what has been observed in the last few years, as far as real estate is concerned, are not that encouraging. Also, liquidating these kinds of real estate is a very challenging and a daunting task in India. And managing, safekeeping these investments, maintaining the real estate properties are an equally difficult task. And the entire process, as far as investing into real estate, then divestment, or liquidating that, and then remitting the proceeds to UK or to any part of the world, is all possible with within the four corners of the Indian law, but it is a very time consuming and enough effort taking kind of exercise, which is very difficult for people who are living outside India to undertake. And especially when it comes to the next generation of so many of the settled NRIs, what we often observe is that they are not keen, the next generation is not keen to relocate to in India in any case, in as far as the developed markets such as UK is concerned. So for them to frequently visit India and inherit and manage all these kinds of affairs becomes an even difficult task for future. As far as someone is concerned who is intending to use it in a very meaningful way, due to whatever kind of plans that they have in their life, it is still a worthwhile proposition. But purely from the viewpoint of investments, real estate may not be as lucrative because of all these factors that I discussed, vis-a-vis the financial assets, which are extremely liquid, and remittance is possible. And also from the viewpoint of safekeeping and all the other convenience, appreciation, every other way, financial assets are something that are gaining a lot of importance for NRIs these days. This is the entire presentation that I wanted to cover. Just a brief description about what we are and what we do. Basically, we have got a 65-year plus legacy into these particular this domain of taxation and financial services, and we have a dedicated team of relationship managers who are there for the end-to-end kind of the servicing as far as the NRI services are concerned. When we have got our presence across all these places in India, which is Mumbai, Ahmedabad, and Rajkot city. And this is the kind of assets that we manage across the globe, from about 5,000 plus individuals who are spread across 22 plus countries. And we have got our representatives outside India as well. And we have a team of about 60 plus people. And the kind of idea that or the entire structure that we have tried to carve out is that we want to become a one-stop solution for any person who has got any kind of financial affairs in India. So it becomes very convenient for the person to have one stop as far as investments, insurance, income tax in India is concerned, support for tax compliance in the home jurisdiction is concerned, or even any other coordination as far as the banking is concerned. So it's just one point of contact for any Indian financial affairs. So that is the kind of model that we try to work with. And this is our upcoming office. So if any one of you happens to visit any of these locations, then it would be a pleasure to meet in person. And this is it. So this is just a general disclaimer from our side that all these views were personal views, and wherever we have used some kind of external data, we have used appropriate references.